next guest is known for his bearish market calls, and he's been very vocal in calling for a market correction. Marc Faber of the Gloom, Boom, and Doom Report joins us now in a fast exclusive on the Fast Line with where he would actually be putting money to work. Marc, it is a pleasure to have you with us.
It's a great pleasure. Thank you.
In one of your recent notes, you said that you're concerned about emerging markets' failure to make new highs, that's a trouble sign for stocks. At the same time, we're seeing crude reach new highs here, $100 and up. Where do you see the market rally right now?
Well, I think that from here onwards, stocks will move very selectively. I happen to like energy because if the economy surprises on the upside, demand will pick up. In actual fact, the demand in developed countries has picked up, and in emerging economies it continues to go up. So I think in a, let's say, Goldilocks outlook, you would have to own some oil. And if you're very bearish about the world, it's a nightmare scenario in the Middle East, and I don't think that Saudi Arabia can offset the production shortfalls of Libya, and Saudi Arabia itself is very vulnerable. And so I would say under any scenario, I would own some oil and energy shares.
In terms of the energy shares,
they have rallied a lot.
Sure.
And they are overdue for a correction.
In terms of the energy shares, Marc, what sorts of energy companies would attract you?
Well, I mean, I recommended Chesapeake Energy when it was around 22, 23, because I happen to like natural gas. And I don't think the natural gas ETFs are attractive. So I like Chesapeake, but at this level, I think it may also be due for a correction.
So basically you're saying that stocks will move selectively. You like energy, but energy is overvalued right now. So if you had to put...
I'm not saying overvalued.
Okay.
I'm saying it's overbought near term.
Okay.
Like the U.S. stock market, by the way.
Okay. Thanks for that clarification. In terms of housing, you have an interesting call that you think the downside is limited. Yes, there could be a further correction, but the downside is in fact limited. Are you actually allocating capital to the housing market?
Well, I think some of the housing companies, the stronger one like KB Homes, are reasonable. I think they will also correct, because I think that the whole inflation trade that has become overly popular is going to correct. That started the correction beginning in November with emerging economies. Stock markets, they are down, and many stocks in emerging economies are down between 40% and 20%. And so I think this correction will be ongoing. But in general, my argument is that if people in the U.S. have money, rather than to play the stock market and the bond market, which is rigged by the Federal Reserve and other institutions, if you can find a house you really like, and a house you really like shouldn't be a house where you think it will go up in value, but the one that you like, then I would buy a house. I think the price is now quite right.
Okay. Marc, we have to leave it there. We appreciate your time. Hope to see you and hear from you again. Marc Faber of the Doom, Boom, and Gloom Report.